Happy Friday, folks. Anthony Speciale here with Speciale Analysis. Welcome back again for another edition of Unedited and On the Edge of the Market. As always, I appreciate you being here. So today I want to discuss a market that I've been trading for many years. In fact, I run a service based around this particular market. Now, of course, what I'm sharing with you today is information. It is not a sales pitch by any means. If you're interested in the service, I will gladly offer you the opportunity to take a look at it. But what I want to talk about is the big picture in this market, because this is affecting all of us. If you have gone to the gas pump, which I'm sure all of you have, unless you own a Tesla, or a fully electric vehicle, you know that we, the people, are being hurt by the price of gasoline, particularly the price of diesel. That price of diesel is used to manufacture, to facilitate the logistics, the delivery, the transportation of all the goods and services that we, the consumer, thrive on. Imagine being in the trucking industry and a year ago paying $3 a gallon for diesel, and today paying $6 or $7 a gallon for diesel. How do you pass that along to the customer? I mean, of course, inflation is running rampant. If you can fix the problem at the gas pump, I believe that you could fix the inflation problem. I truly do. Listen, are there other factors? Yes. The biggest one, the one that hurts the most, the one that hits our pocket each and every day, is the gas and diesel pumps. So I want to show you the crude market and tell you what I'm looking at and kind of give you a little professional insight to this particular market, which I've navigated now for well over a decade. This is the big picture. This is a weekly chart. We're back to 2008-ish. Here you go, 2007. So here, you see the whole big picture. Here is the 2008 high, $147 roughly per se. We have a previous set of highs in and around this 114.83 area, which we've tested it, we've yet to settle above it on a weekly basis. So that's what we're looking for at this point. We're looking at the macro view here. We're not just looking at the trend, we're not looking at the channels, we're looking at the big picture. Big picture here, if we get a weekly settlement above that 114.83 by 1+%. So I am being ultra conservative, as I always am, and I am looking personally for a weekly settlement above 117. Now, I've shared this with my members of the Speciale Report. That is a paid service that I offer at Traders Agency alongside Josh Martinez and Ross Givens. Something you're interested in, by all means, please feel free to take a look at it, see if it's a right fit for you. If it's not, no harm, no foul. There's still plenty of valuable information I'm going to deliver you right here, right now, for free. Obviously, I can't give you what I give my members, but I can also, I can share with you conceptually what our plan is when or if this transpires. Today, we are sitting at approximately 112 in the market. I am looking for, again, a weekly settlement above 117. That really gives me the confirmation I'm looking for to know that this market is likely to go higher. How much higher? A. B. How long will it take? For me, I'm going to put a 3 to 5 month time frame on it, that when this price finally does snap and does break out to the upside, and if it does follow through as we anticipate it to, 3 to 5 months, we should retest the 2008 high at $147. So, is it going to take a little bit of time? Yes. Could there be a little turbulence along the way? Also, yes. In my honest, humble opinion, I don't think buying this market, at least the futures market, is the right way. If you are a stock trader, you want to buy the ETF, meaning the USO, or the leveraged ETF, the UCO, that's an option. The more savvy way to take advantage of this, and the way that I'm going to take my members, to take advantage of this trade, is through the options market. We're going to look for the proper out-of-the-money call option that we're going to get the most amount of leverage on, based on the time frame which I anticipate this trade to transpire over. And that's how we're going to posture ourselves to hopefully take a several 100% return on our investment. Now, guys, I've done this in the past. big picture moves. And in several months, I've returned, my members and myself several 100%, as much as 500% return on investment. So there is wild, wild, wild opportunity. I'm giving you for free the context. A weekly settlement above 117 should in fact offer us a test of the 147 2008 high. So that is my gift to you. However you're going to posture yourself to do that, that is ultimately up to you. Again, myself and my members of the Special Report at Traders Agency are going to posture ourselves in the options market. Which option, which strike price, which expiration, I won't know that until I actually get the confirmation, and then I will put that all together for my members so they see it and have it explicitly written out so they can decide what is absolutely best for them, if this position is best for them. But what do I see happening? I'm going to dial this in a little bit just so we can take a look. This is, again, a weekly chart. And we have this, what I call, we had a defined trend. So here's the COVID sell-off. Here's a trend. Impulse, consolidation, impulse, minor correction, impulse, correction, impulse, correction, impulse, knee-jerk reaction, Russia invading Ukraine, and then really, really tight consolidation, or what I call coiling, meaning the coil just is getting tighter, 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 and when that coil snaps, the price breaks. So we are not that far from breaking the area which I need it to in order to implement this trade idea. So I'm sharing this with you now so that as you're watching this market and I give you weekly updates on it, you have some insight to what I'm looking for. I'm looking for that weekly settlement. If I get it, I know that I have a good chance of running this market, from in and around this area up to in and around this area to capture approximately a 25% price move and nearly 3,000 ticks. I mean, that is a crazy amount of opportunity. Now, are we going to catch every tick of it? Probably not. We're going to get in after 117. We're going to get out a little short of 147. But it's okay. I don't need to capture all of it. As long as I get a good piece of it, I can be wildly successful. So we're going to time it right. We're going to do the best we can. Of course, past, results are not guaranteed, indicative of future results. But with that being said, as long as this does what it, the methodology has done in the past, it will likely do it again in the future. And with that, we're going to take advantage of it. We're going to take the opportunity. Whatever happens, ultimately happens. But you can see we had this big snap in price action, and then it got a little tighter, and then it got a little tighter, and it gets a little tighter, and a little tighter, and a little tighter. But you can see the trend is still to the upside. The trend is never turned down. Looking at this picture, price goes from the bottom left to the top right. A long trend is still intact. Russia invasion or not, the trend was intact prior to Russia invading Ukraine. The trend is still intact. There was just a big bit of whipsaw based upon geopolitical events that transpired. But you can see it tightened right back up, and we are still trending. We can still draw a defined trend line in this market that goes up. Boom. There you have it. There you have it. We are still trending higher. Without a doubt, we are still trending higher. Where are we headed? Towards where I expect we are. The 2008 high. So guys, I'm telling you this to keep an eye on it. If you are interested in looking for a paid service, it is very inexpensive for you to get involved. You can go to fastpasstofreedom.com. You can get involved. fastpasstofreedom.com. You can read all about my story. You can look at my track record. You can look here at some of my trading statements. You can, again, read all about my life, my story, the strategy, the whole 9 yards. You can come all the way down, see all the examples of all I've done for other folks. Huge opportunities, and you can get involved today with my money back guarantee, meaning if you're not happy, we will give you your money back, no questions asked. You can join this program today for $49. If $49 is too much, you could select the monthly option for just $9. If $49 is too much for the year, you can test drive this product, this service, which is my personal approach to the crude market that I've been trading for a decade. For as little as $9 a month, you can test drive it. If you don't like it after your first month, cancel. We will give you your money back, no questions asked. So I just encourage you to think about it if you're interested in following me, on a paid style basis. If you're not, that's okay, because I'm just here to offer you the information. Yes, you'll have to put the trades together for yourself. Yes, you'll have to manage it for yourself. But I will share with you what you need to see. But again, if you are interested in learning more, if you want to be part of a live class that I host every Wednesday, if you want, a weekly newsletter that comes out about this market specifically, if you want weekly updates, if you want in-depth weekly analysis, drawn and handwritten and typed out, again, I strongly consider looking at the product, deciding if it may or may not be right for you. For $9 for a month, it's relatively inexpensive. If you'd like, again, for an entire year for $49. And if at any point you are unhappy or you find as though you are not getting what you believe it is valued at, we will happily give you your money back. So there's not much more I can do for you outside of that than being as willing to let you try it for free as possible. So again, fastpasstofreedom.com if you want to check out the product and the service built specifically around the crude market, where we trade the futures market, the ETF market, and the options market on all these crazy ideas for this particular sector. But guys, with that being said, this again is not a sales pitch. I am going to give you actionable information, and I just have a weekly settlement above 117 does put us on track 3 to 5 months to test 147. However you plan to approach that is of course up to you, but I wanted to share this with you because we are all suffering pain at the gas pump, and this is our way of booking some profits to take that money back and put it back in our pocket. Remember, whenever there's blood in the streets, there's opportunity to be had. I know we don't want to seek opportunity on the back of somebody else's suffering, but the reality is if we don't, somebody else is going to. So we have to keep that in perspective. So with that, I wish all of you a beautiful and blessed day. I hope you have a wonderful weekend. I hope you enjoy your friends and family relaxation. Come back Monday. We will hit the weekly major market update. Tuesday, we'll recap on all our positions we've been watching, and then we'll carry on next week and see where the market takes us. So again, I wish you a wonderful day, a wonderful weekend, and I will see you on Monday.